This help video discusses the details of the tertiary, daily, secondary or weekly, and primary or the monthly trends. We're going to open up and we're going to take a look at the grain markets and Bitcoin as the example. The details about the daily or tertiary trends are located through columns P and Y, and the analysis here is always the same for all three time frames. The weekly time frame is discussed here, and the monthly is revealed here. So let's look at the individual columns. P, or this column, is trend. That means up or down. That's all it can be. BO means breakout. So a trend that's up with a breakout designation, or BO, next to it has just broken out. So the count's going to be 1. The count would be 1 here, 1 day. The count would be 1 week. And the count would be 1 month right there. This DIV is divergence. It tells us that the uptrend is up, but volume, which is also an important leading indicator of price, is down. So volume is diverging from the uptrend currently in corn. That's a warning that the trend might be vulnerable on the daily time frame. Date naught is the initial date of the impulse, of which it started 52 days ago. And that's pretty much self-explanatory for all markets. So it would be 12.11 here and 2/3/21 on Bitcoin. Right here, we've seen these before in the reviews. This is the price cycle, and this is the time cycle. It's measured in standard deviations that are normalized to 0. So a normalized price cycle, which would be the return, would be have a z-score of 0. 4 suggests that corn is extremely extended and could be vulnerable to a reversal, at least short term. The price cycles, which I've talked about in detail, follows the same logic. It goes normalized scores where the mean is 0. So a near 4 time cycle for corn is also extended in terms of time, which here would be 52 weeks. It's super extended for soybeans at over 6 at 135 weeks. These are all warnings to stay away from corn and soybeans over the short term, as this trend needs to probably reset. BUT is just the count. In this case, the designation of BU means bull. The same thing applies over here, except it's BR, and BR means bear. So this is where all the bear statistics are. This is where all the bullish statistics are right here. Ultimately, BU is just the time count, or so it's bullish T, which is time. S is standardized, the BUS is standardized price, and this BUST is standardized time. So BUT is time, so it's 52 days, 135 days, 9 days. If any statistics were located here and this was a down impulse, the counts and all the things that we would talk about would be right here. These numbers right in these columns would shift over here. There's nothing with a bearish count, but this would just shift over. These numbers would be the same, and then we'd say down here. The analysis for the daily or tertiary trend is exactly the same for weekly, and it's exactly the same for monthly. So that's how to use the daily trends or the trend columns by anyone who subscribes. We want to follow them so that the trend is in either upside alignment in the composite trend, but ultimately the evolution of the trade focuses on the primary trend, and in this case the primary trend is up. As these other trends can move down and move the composite trend out of alignment, in this case they'd be triple up, so if this falls down or this falls down, they'd be out of alignment. The primary trend would still be up, but the market would be in consolidation. If you have any questions about how to use the trend columns, you can contact me directly through the blog, or you can leave some comments under the video. Direct communication is the best when we're talking about help files. So keep an eye on the 3 time frames. It plays an important role in the evolution of the trade. And read up as much as you can about the evolution of the trade. It's an important concept that keeps us following our trading discipline rather than our emotions. Thanks for watching, and watch some more help videos.